Hello. So, investors, it's been scary times out there. You know, the headlines, projecting a lot of doom and gloom, kind of giving a picture of things are going to be getting worse. They talk about an impending recession, et cetera, et cetera. The S&P so far to date has been down around 25%. And the bond market is probably going to have its worst year in recorded history based on where it's at right now. So you're asking yourself, what do I do? What should I be doing during this time period? One of the more common quotes that I've heard over the years when people are looking at their accounts are going down is they say, I just want to stop the bleeding, right? And that means like, hey, I want to just move it into something safe. I want to just move it into a savings account or whatever. I want to stop the bleeding. Very common reaction. The problem is it maybe makes us feel good at the moment because it doesn't feel like we got any more downside risk. But in order for that to work out, you have to have two things that happen for you. Two important things have to happen for that to work. So you invest your money, right? Invest your dollars, and your investment grew, right? And here we have 2022. Market goes down, so things are down 25%. And so here we are right here. And you're like, I just want to sell, I want to stop the bleeding, right? So you decide to sell at this point, and you put it in a safe bank account. And you really kind of don't think about it, you're just like going, it's not bleeding anymore. And you're like, well, once the news is better, I'll reinvest, right? But for this decision to work out for you, two things have to happen, and it's very important, or it can be very costly to you. The market has to continue down further from where you sold, right? And then at some point in time, it's going to reverse, and you never know when is the problem. So now it goes up, starting to go up, and you have to, before it gets to here, which is where you exited, you have to buy back in, right? Otherwise, you sold something for a lot lower price and you bought it again at a higher price, right? So that means you legitimately lost money. You locked in some losses. So emotionally or psychology-wise, here's where most people screw up, is buying back in, because if it was an emotional decision to sell, then you're waiting until you feel better, and you really don't know the coast is clear until it's all behind us, right? So that means you're back into this area sometime, and people have done so much damage to themselves by this emotional buying and selling reaction. So like I said, the market has to continue down, number one, and number two, you have to buy back in before it gets to where you sold. The other thing is, and again, I'm assuming that you have a properly structured portfolio for your objective, just be patient. You can't screw up. The financial markets are batting 1,000. They are self-correcting over time. They always have. When we get to this peak, we've always had higher peaks down the road. So markets are self-correcting. If you can be patient, assuming you got the proper portfolio, that is going to be your best solution. Stay tuned in. I'm going to have some follow-up messages or information regarding some other different strategies that you can do to be very strategic at this time. But remember, patience always works. Thank you.